Amgen out with earnings just a few moments ago. Let's recap the numbers with Bloomberg. Zara Burton. Zara, a bit of a beat here.
A bit of a beat, more than a beat. They're actually boosting their forecast. They're now seeing a maximum of about $4.95 a share. It had seen up to $4.75. The stock actually trading higher in the after hours by more than $2. As you can see, up about 3.3%. They're talking about sales trending toward the upper end of their forecast. They're beating that bottom line number, coming in at $129 versus estimates of $116. Sales overall better than expected as well. Drug sales overall, some areas definitely declining, but coming in better than expected. Aranesp sales, these are the anemia drug sales, they came in better than expected, although they fell. Estimates were for about $652. They came in at $693. Epigen sales as well, sold alongside Aranesp, but usually those rising 3% to $638 million. Enbrel, rheumatoid arthritis drug as well, and psoriasis drug had been down because of the recession in terms of sales. Those sales came in better than expected at $899 million versus estimates for $834 million. But Matt, the big story that analysts are definitely focused on, denosumab. This is the bone drug to compete with Fosamax and Boniva drugs, you know, the Southfields commercials. That FDA panel expected to review this drug in August, but Amgen now saying GlaxoSmithKline is going to be its partner marketing this drug. Back to you.
All right, Zara, thanks very much for that. You know what? We're going to continue talking about Amgen here. Eric Schmidt is joining us. He is managing director and analyst at Cowen and Company. And Eric, thanks for joining us. Let me first get your reaction to the numbers, because as Zara said, it's not just a bit of a beat here. It looks like they've beaten expectations pretty much across the board.
Yeah, real strong second quarter. This quarter does tend to be a little bit seasonally strong for Amgen, but we really needed this coming off of the heels of a very weak Q1. I think folks are going to feel a lot more comfortable with the base business here tomorrow morning. What
are your biggest focuses here for Amgen going forward? I mean, are you focusing on August here?
We are. Now, again, the base business is still the most important driver of this company's success. As you noted, the company will do about $14.8 billion in sales this year. So whether those sales are sustainable or it might even eke out a little bit of growth, that's the most important thing. But the August 13th panel is important. The Street does have relatively high expectations for denosumab in osteoporosis. We obviously need that panel to go well. In terms of denosumab, we're actually more excited about the opportunity in oncology. Amgen did have some excellent data earlier this month on denosumab in oncology. We think that's the best indication for this drug, probably about $2 billion in sales expected there.
What's the overhang here in case it doesn't go well on August 13th? I mean, what's the downside look like?
Well, you never know what's going to happen at the FDA, and this drug isn't free of side effects, so there's always a little bit of risk. But the risk-benefit here is really favorable. Amgen's tested this drug in nearly 10,000 patients in this indication, and the side effect profile is very good. So I think it's not a slam dunk, but certainly a panel that's likely to go quite well. If something were to occur on the negative side, sure, folks would have to downwardly revise expectations for DMAB. The oncology indication, again, I mentioned was, we think, the most important of the two markets for this drug. But osteoporosis could, as some expect, be up to a $2 billion indication as well. So, you know, those sales could be at risk if the panel doesn't go well.
All right. Hey, Eric, thank you so much for sticking with us there and taking some time to talk to us today. Eric Schmidt from Cowen talking about Amgen.